It is the most profoundly disruptive technology the world has ever seen. It is of civilizational level importance. Of the importance, it is the largest game of nations we will ever see played, because nobody can allow the other side to win this. So more than nuclear proliferation, this endlessly scales.
You just heard global macro investor Raoul make an extraordinary claim that a new technology represents not just a market opportunity, but a shift of civilizational level importance. He calls it the largest game of nations in history, a force that will reshape the global order. It's a bold vision, and it's the foundation for what he believes is the greatest macro trade of all time. But to understand how to position for a future that big, you first have to master the single most dominant force driving asset prices today. In the clip you're about to see, Raoul dives into the confusing market action of late 2023, where even stellar earnings from companies like Nvidia couldn't stop stocks from falling. He explains that this isn't about company performance, it's about a critical mismatch of liquidity in the financial system. This temporary liquidity drain, as he calls it, is the key to understanding why high-risk assets like tech and crypto were so volatile. In fact, his research shows that global liquidity explains over 95% of the Nasdaq's price movements. It's the hidden engine behind the charts, and if you want to stay ahead of the macro trends that most people miss, make sure you subscribe to our channel. Once you grasp this foundational concept of liquidity, you'll be prepared for how Raoul connects it back to that epic long-term thesis, a technological arms race that will demand unimaginable levels of capital and energy. So, let's start with the immediate puzzle, the confusing market action of late 2023, and the one macro factor that explains it all.
There seems to be quite a lot going on, but nobody can explain it. There's where we are today. What day are we? We're on the 20th of November talking today, and market's puking. And it's been in that weak trend. I've been looking at this for a while, and there is this mismatch of liquidity that's happening at a macro level that's causing a lot of the issues we're seeing right now. And that is, without getting in too deeply into the weeds of it, basically, because of the government shutdown, the Treasury built up its general account and has not been able to really drain it yet. And there's no offsetting buffer because the reverse repo's drained and we've got QT going on. So we've got this kind of sucking of liquidity out of the system that really has affected the highest risk assets further out the curve, and crypto is that. Technology has been kind of volatile because of the same reason, but it's been held up somewhat by buybacks and also held up by the generally, I think 80% of all fund managers were below benchmark because they've missed tech, because all the way through they said tech's a bubble, AI's a bubble, AI's a bubble, and they've missed the whole move. And so that's dramatically affected performance. So they've been performance chasing, which kind of meant that Nasdaq outperformed for a period of time. But it's this liquidity thing. Liquidity, we found in our work at Global Macro Investor, using the total global liquidity explains 95% or 97% of Nasdaq's price movements over time since 2012 and 90% of Bitcoin's. So it is the single most dominant macro factor, and most of the explanations lie therein.
Yeah. Look, it's a great read. I mean, I want to go front and center. NVIDIA reported earnings. Jensen Huang is equally as important as Jerome Powell these days. They beat earnings. Expectation was 54, 55 billion. They came in at 57. Guidance for next year was very strong. Stocks down today. Question in investing is, how much are things priced in? Like the Mag 7, most managers, even though they may have been underperforming, it's been still a pretty good year for most folks. Are we just in a general deleveraging risk-off cycle? People going into the holidays, they want to take profit, collect carry for the year? Or is there something else going on in a 2026? Is there a broader kind of macro concerns that you have?
So on the macro side, the business cycle, which is the main kind of driver of everything, has been very subdued for this entire cycle, and that's been driven by the high rates environment and the liquidity environment. If you, on a forward-looking basis, understanding all of the fiscal stimulus that's coming, plus liquidity stimulus that's coming, and the probability of rate cuts coming, the chances are the business cycle is going to be a lot stronger going into the election year. Don't forget, we've got Scott Bessent running the Treasuries, an ex-hedge fund manager. He understands this game very well. So I think on a forward-looking basis, it looks great. But what you've got is this liquidity air pocket that means that there's not as much money around. So the people's propensity to take money off the table is higher. People are nervous. I mean, we've seen the fear index in equities be down at like 8, which is insane considering the market's barely off the highs. So it shows you there's some pervasive sense of fear. And so any movement in the market kind of gets exaggerated very quickly. And I think, after the NVIDIA earnings, people just want to quickly take money off the table. And as you say, next week's a US holiday week. Things start calming down as well. And if you've had a decent year, you do want to protect it. Yeah. But normally end of the year is usually pretty strong. And considering they've got to drain somewhat of the TGA to pay for all of the employees they furloughed, et cetera, there's a reasonable amount of liquidity that will come into the economy over year end. Yeah.
Before we jump into 2026, I want to get your read on crypto. You talk about it being a pretty directly correlated to flows. Bitcoin has erased gains for the year. The stock market's still up. What's going on there? I mean, do you worry about, that is crypto just reacting before and ahead of the stock market, or is there something more kind of specific to the asset class?
No, I mean, crypto, there's two different levels. One is go back to its liquidity. So liquidity has hit crypto more than anything else. And that is the Fed net liquidity that has shrunk. So it's hit that. But then we've got OG profit taking we've seen. So that continues. And that kind of makes sense. And you've got this pervasive opinion that the 4-year cycle is what it is. And therefore you must sell in November and go, October, November, and go away and come back in, 12 months time. So there's that pervasive feeling. And then there's, I think, somewhere there is some damage that was done during the October the 10th flash crash in crypto. Now, I don't know if there's a body there, but my guess is the balance sheets of some of the market makers are impaired. So it means that they can't provide as much liquidity as they have done, which exaggerates price moves. I think that probably makes sense. We're also seeing some unwinding of the token holdings by the DATs because of the construct that they've got. They buy back their equity. So, that's ugly, and that will probably continue if price action continues like this. So you've got this supply going on, less liquidity around because of the Federal Reserve and the Treasury, and less liquidity in markets because of impairment after October 10th. Makes it just feel not great.
So, the market confusion of late 2023 wasn't about fundamentals. As Raoul Pal just explained, even stellar earnings from companies like NVIDIA couldn't fight the tide. The real culprit was a temporary liquidity air pocket, a technical but powerful drain on the financial system. His research shows this isn't a minor detail. Global liquidity is the single most dominant macro factor, explaining over 95% of the Nasdaq's price movements. Understanding this mechanism is crucial, because that short-term liquidity drain is about to be dwarfed by a long-term tidal wave. The AI revolution, which Raoul calls the greatest game of nations, won't just be fought with code. It will be funded by an unprecedented flood of capital and powered by staggering amounts of energy. The short-term mechanics of liquidity are simply a preview of the much larger forces to come. Now, he pivots from today's market drivers to the epic forces shaping the next decade. He lays out the fundamental inputs required to win this technological arms race, a perpetual cycle that he believes will define the new global hierarchy. Listen for how this geopolitical imperative creates a pressing, immediate need for one specific resource, and how he connects this entire thesis to another disruptive asset class, forming the two pillars of the greatest macro trade of all time. With that foundation set, Raoul returns to the core of his thesis, the one technology he now spends almost all his time on.
So because I do so little trading, and I've got all the framework in place for the macro stuff that I do, I spend most of my time thinking, reading, doing, writing about AI. And so this is the greatest discovery humanity will ever make, and the last discovery humanity will make.
Say more.
Well, after AGI comes, it is not us making the discovery, it is it.
Mm-hmm.
Right? This is the scaling of intelligence to infinity. Intelligence is what we have been paid our careers for. Our intelligence goes to zero in value over time. Doesn't mean we go to zero in value, but that particular aspect of what we do. So it is the most profoundly disruptive technology the world has ever seen. It is of civilizational level importance. Of the importance, it is the largest game of nations we will ever see played, because nobody can allow the other side to win this. So more than nuclear proliferation, this endlessly scales. And so, I know people didn't like it when Sam Altman talked about government backstops. There is absolutely a backstop. There is not a single way the US or China would allow their industry to not succeed. So that's how big this is. It is economically the most disruptive force we've ever seen. It is a nuclear bomb when it comes to deflation. People just have no comprehension of how big this thing is.
Yeah, I would agree with that. You talk about US, China, and the political aspect of AI. We've seen hyperscalers and the amount of huge capex going into just energy resources. China is building the most amount of nuclear reactors, way more than the US. How do you think about that? Or, if you have a good, reliable, cheap source of energy, it will be a prerequisite to own and be a leader in this AI revolution. Do you agree with that? If so, how do you think about who wins here, and how do you ultimately translate that into an investable thesis?
So almost the fundamental principle of the universe is to convert units of energy into units of intelligence. Literally everything we do and everything the planet does is basically that. So there is a flywheel here, and the flywheel is very clear. It's energy, compute, intelligence, creates more energy, more compute, more intelligence. This is the spinning flywheel of all of evolution and everything to do with this technology. So when you're looking at the different elements of the flywheel, we've got NVIDIA and others working on the compute side, but we know that that's not going to get us to the next level. We're going to go to whether it's biological compute or quantum compute or a combination of the two. That's where we're going, and we're seeing signs of that. On the energy side, that's our most pressing need right now. We can manufacture enough chips, but we don't have enough energy because you're going to stress the grids. So again, we go back to this is the most important race of all time to win. So look what China did. Yes, they're building nuclear, but they scaled more solar in 12 months than the entire solar supply of the rest of the world. They're telling you what the fastest source of energy is. The fastest, cheapest source of scaling energy is solar. The most efficient form of energy is nuclear. Mm-hmm. But nuclear the South Koreans are the fastest to build nuclear plants. They're about 6.5 years. But once you add planning permission and everything else, it's still an 8 or 9 year cycle, right? So if the US says, oh, we're going to just rely on nuclear, we got 9 years, not enough energy. So it has to be solar first. So solar is the only thing that you can scale fast enough. You've got the battery technology to be able to now reduce reliance on the grid. You're not removing from the grid entirely. What you're going to do is take, let's say, 60% of the new energy requirements off grid. The grid will supply the rest. Then it's natural gas. So you can get a natural gas plant up in about 2 years. So natural gas, so solar first, you can get that going in 12 months or less. You've got then natural gas behind it, but you need to be near pipelines. If not, you've got to lay pipelines. Planning permission could take years. So this is why Texas is hyperscaling energy right now, because they've got plenty of sunshine, plenty of natural gas, and low regs. So that's, and then nuclear comes behind it, but you have to start that nuclear thing now because you need it for 10 years' time. Because there's no way you're going to power something moving towards ASI without a combination of nuclear and the sun. I mean, I'm a big believer in the Kardashev scale anyway, which is 99.9% of the entire gravity of our universe is our sun, of our solar system for sure. So all of the energy held within that is more than enough for our needs. We just need to figure out the technology to harness it.
Yeah, it's complementary, right? Solar has been good to complement the fragility of the grid, and then you have nuclear to just be a more reliable powerhouse, but it takes longer. But overlaying all that and the conversation around AI, and you talk about you're mostly invested in crypto, but you have some pockets of technology. How do you think about the ratio of the combination of the two theses, crypto and AI, and then more so the proportion by which you kind of position your portfolio?
So AI is not the most easily investable theme, really. We've got hyperscalers, but you're buying other cash flows in other parts of the business. So it's not a clear bet. Yeah, Nvidia, but it's scary to be in a very, very crowded big bet. I get it. It's a great trade. I have no issue with that. But the nexus of AI and blockchain is huge. Blockchain is the technology rails by which all of this will operate. It's the new layer to the internet. As we roll out millions and then billions of agents, again, need payments. They need payment for what? Energy and compute, the same flywheel. So the energy and compute costs need to be paid, and maybe there's a profit margin if they're set up as businesses. And the instantaneous requirement for payments requires blockchain rails. Also, in a world of such deflationary forces, you need to have the ability to have scarce assets, right? Because in a digital world, nothing is scarce. So blockchain solves digital scarcity, which is a really important factor as we become increasingly digital. So these technologies are incredibly important, and they interact together. How do you invest in it? Your job is to basically look at one chart versus the other and say what's going to outperform over time. It has been, if you look at it, Bitcoin has outperformed, or the NASDAQ has underperformed Bitcoin by 99.97% since 2012. So it's been a one-horse race right now. I call it the supermassive black hole. Will that always be prevalent? Maybe not. But it's very difficult. There are some clear winners that have done better. So NVIDIA has done well over that time, stuff like that. So again, all I do with that bet is this is all the same thing. The world is about to become more digital tomorrow. And these are the two mega horses in that race. How do you allocate your capital between the two? Depends on your risk profile, and depends on, what has got the relative kind of attention thrust or momentum at any one period of time. This year, it's been technology stocks. Last year, crypto massively outperformed. So what do you hold over an extended period of time? A bit of both.
The video began with a monumental claim, a technological shift so profound, it represents the largest game of nations in history. We now have the complete framework for what Raoul calls the greatest macro trade of all time. It starts by understanding the market's true engine. The confusing price action of late 2023 wasn't about earnings. It was a lesson in the power of liquidity. As Powell showed, short-term capital flows explain over 95% of the NASDAQ's movements. That same principle now scales to a global, multi-decade event. The race for AI supremacy will trigger a long-term tidal wave of capital, not just into compute, but into the energy required to power it. The logic is direct. If AI is a geopolitical imperative that nations cannot afford to lose, then they will fund an unprecedented energy build-out, starting with what can be scaled fastest, solar. And when billions of AI agents are deployed, they will need a new financial infrastructure, blockchain rails, for instantaneous payments of energy and compute. This creates the two pillars of the trade. The thesis isn't about a single stock, but a bet on the two mega horses driving the world's inevitable digital transformation, AI and crypto. The key indicator to watch now isn't just code. It's the physical build-out of energy capacity, from solar farms to nuclear planning. This is the flywheel: energy, compute, and intelligence, spinning faster and faster. Follow for the next update. We'll track this as it unfolds.